at events introduced new vehicles and provided some timelines. But much of what Musk discussed had already been mentioned before. Investors also think that the event is lacking in safety data. Hi, I'm Jun, a researcher from Dxpert. Tesla had 5 key objectives for the We Robot event, and that's to unveil a robotaxi, address its entry into service, present safety data, outlines its business model, and provides information on a potential new car. But Tesla only achieved 3. Tesla Robotaxi might represent the future of transportation, but they are stuck at the starting gate, waiting for regulatory approval. Tesla's ambitious plans for steering-wheel-free robotaxis could hit the same bureaucratic hurdles as GM's Cruise, which has been awaiting approval since mid-2023. A more feasible move for Tesla might be to launch its FSD system in selected states, similar to how Nevada approved Mercedes' hands-off Level 3 technology. While Tesla continued to push for fully autonomous vehicle, we could see regular cybercabs with traditional steering wheels and pedals first to comply with current laws, while the company works towards its robotaxi vision. However, Tesla is playing catch-up with rivals like Waymo and Cruise, both of which have logged millions of miles testing driverless cars on public roads. Yet, even these companies have faced their share of problems such as traffic jams, blocked roads, and some injuries. Elon Musk has promised that an unsupervised version of Tesla's FSD will be available for Model 3 and Model Y owners in Texas and California by 2025. But the challenge is how Tesla plans to navigate the regulatory maze. Building self-driving cars isn't just about cutting-edge technology. It requires extensive collaboration with regulators, proof of safety, and transparency about any issues. Other companies have made progress, but Tesla can rush through the process. Notably, Tesla hasn't reported testing any self-driving cars to California's autonomous vehicle program since April 2019. In California, companies must have permit from the DMV for testing with safety drivers and from the Public Utilities Commission for offering driverless passenger service. Despite Tesla's claim that its FSD tech doesn't rely on high-definition maps, the company has been mapping areas ahead of the demos during V-Robot Party. Recently, Tesla's director of autopilot software, Ashok Iluswamy, shared some impressive details about the Cybercab fleet at the V-Robot unveiling. He revealed that 19 Cybercabs and 29 Model Ys were driving autonomously without human operators during the event. These vehicles completed 1,300 trips and safely transported over 2,000 attendees for more than 3.5 hours. A key takeaway was how quickly people adapted to the driverless rides, indicating growing public acceptance of autonomous vehicles. He also noted that AI software running these cars is close to the production version expected in FSD version 13, showing significant progress towards Tesla unsupervised driving goals as compared to V12 or version 12. While the party was centered around Tesla advancement in FSD, many had hoped for the reveal of a new vehicle priced around $25,000. Such a price will make it cheaper than 95% of cars sold in the US in 2023, potentially opening the doors for Tesla to dominate the entire market. The Cybercab, with its $30,000 price tag, would still be more affordable than what 80% of US buyers paid for their vehicles last year, but it may not offer the versatility that buyers in the lower price segment typically seek. Tesla's sky-high valuation, with a P ratio of about 61, remains closely tied to its self-driving segment. Even after a recent post-event dip, Tesla has a history of volatility around AI-focused announcements, where Elon Musk's ambitious timelines often clash with investors' concern about execution. This tension has likely led to a higher discount rate for robotaxi-related earnings, particularly due to the lack of a clear technical roadmap. However, Tesla continues to lead the industry with its advanced chip, AI, and software engineering teams, positioning it well to eventually overcome regulatory and technological hurdles, whether with Robotaxi or adapted cybercabs. According to a fair value model, the net present value of Tesla's self-driving business could reach $322 billion, representing about 45% of its current market capitalization. As autonomous vehicle programs burn through over $1 billion a year in cash, the conversation has shifted from tech innovation to economic feasibility. While Waymo is projected to hit $1.32 per mile, Tesla could potentially reach 91 cents per mile, partly due to its avoidance of expensive sensors like LiDAR. This figure is below the $1.65 per mile cost for ride-sharing services, but still higher than the 72 cents per mile for personal car ownership. For Tesla, the key is making robotaxis economically viable lies in achieving high vehicle utilization over time. The company also needs to build out a full infrastructure to support AV operations, including fleets, parking, maintenance, charging, and tele-operations. While the V-Robot event may have left some investors underwhelmed, there's still a potential catalyst for Tesla on the horizon tied to the 2024 US elections. Elon Musk has expressed his support for Donald Trump, and with the polling for the Electoral College currently leaning towards a Trump victory, this political backing could bolster Tesla stock price. If Trump wins, investors may see it as a tailwind for TSLA shares, potentially driving optimism around regulatory support or business-friendly policies. However, Tesla shares is facing technical resistance at the $240 level following the drop after the V-Robot event. This level now serves as a significant hurdle, and a further decline towards the lower boundary of the triangle pattern could indicate continued investors' disappointment and a reassessment of the hype surrounding the Cybercar unveiling. The road ahead for Tesla's robotaxi ambitions is still filled with high-tech promise, but the company will have to clear regulatory barriers and outpace fierce competition. With so much of Tesla's valuation riding on its self-driving vision, the company's ability to deliver will be crucial for sustaining its lofty market position. Thanks for tuning in. I hope you found today's video insightful. Everything I've shared comes from a mix of research and my own perspective. Remember, when it comes to trading or investing, always do your own homework and stay aware of the risk. If you enjoyed this video and found it helpful, please subscribe, share, and hit the like button. You can quickly access to all our channels by scanning the QR code. Take care, and I'll see you in the next episode.